Hello good people. Welcome back to another video of Craw. Subscribe to our channel to get regular and latest cryptocurrency updates and pump signals. Ethereum rose more than 8% to $2,587 on Monday, although it was still 40% off a record high of more than $4,300 set earlier this month. At 11:53 Greenwich Mean Time, it was trading at $2,565.69, up 7.4%. Bitcoin, the world's biggest and best-known cryptocurrency, rose 3.7% to $36,977 in sleepy trade with London and the United States markets closed for the holidays. Bitcoin has been less volatile in recent days, but it is still down more than 35% this month due to increased regulatory constraints on the industry. The trend continued in the week ending May 25, with net short positions nearly doubling from the previous week, which was the smallest net short since late March last year. Governor of the Bank of Japan Haruhiko Kuroda has launched a new attack on Bitcoin, claiming that much of the trading is speculative. His comments came in the wake of China's recent moves to rein on mining activity. Yao Qian, the former head of the People's Bank of China's PBOC digital currency effort, believes central bank digital currencies will grow more smart and may one day run on blockchain networks like Ethereum. According to Sina Finance, Yao Qian, now director of the China Securities Regulatory Commission's Science and Technology Supervision Bureau, CBDCs should not try to be merely a digital equivalent of real cash, but should also have smart contract capability. Smart contracts are pieces of blockchain code that execute automatically when specific criteria are satisfied, and they can be used to supplement or replace formal contracts. However, Yao said at the International Finance Forum 2021 Spring Conference in Beijing that the frequency of security problems caused by smart contract flaws illustrates that the technology is still in its infancy. He also expressed worries about the legal legality of digital contracts. As a result, central banks should proceed with caution, starting with simple smart contracts and gradually increasing their complexity as security and legality improve. Yao oversaw the PBOC's Digital Currency Research Lab from its establishment until his departure in 2018, when he joined the China Securities Regulatory Commission. Many of the central bank's patent applications relating to CBDC technology list him as an inventor or co-author. Trials of the People's Bank's digital yuan have been conducted with commercial banks and payment companies. A CBDC, on the other hand, does not have to be account-based, according to Yao. A digital yuan or digital dollar could theoretically sit on Ethereum's network, or the Facebook-backed Diem's network, using a two-tier model, formerly Libra. As a result, central banks would be able to supply CBDCs directly to users, bypassing the need for middlemen. Layered operations can help the central bank's digital currency assist groups without bank accounts and achieve financial inclusion, he explained. Ethereum is an open-source public service that employs blockchain technology to enable smart contracts and cryptocurrency trading without the involvement of a middleman. Externally owned accounts, managed by private keys affected by human users, and contract accounts are the two types of accounts available on Ethereum. Ethereum enables developers to create a wide range of decentralized applications. Despite the fact that Bitcoin remains the most popular cryptocurrency, many believe Ethereum's rapid growth will soon see it replace Bitcoin in terms of usage. Certainly, some market watchers believe so. They attribute the recent surge to a combination of high-yield risk-taking and the kind of retail investor fervor that propelled stocks like GameStop Corp. To new heights. Then there's the reality that a small group of individuals known as whales control large amounts of Bitcoin and Ether and have the power to manipulate prices at will. Even proponents of cryptocurrency admit that the market is prone to significant volatility. However, they remind out that big cryptocurrencies such as Bitcoin and Ether have recovered from long-term downtrends to reach new highs in multiple cycles. Regulators in many places of the world are only now catching up with Bitcoin and Ethereum's innovations. Overly onerous financial or tax restrictions run the risk of diverting development and energy away from particular countries. Gary Gensler, the next head of the Securities and Exchange Commission in the United States, is a crypto enthusiast who taught a seminar on the subject at the Massachusetts Institute of Technology. The Internal Revenue Service, on the other hand, considers cryptocurrencies to be property subject to capital gains taxes, which is a major deterrent to consumers using their crypto. There's also the possibility that scammers may steal your crypto, or that you'll lose or misplace the secret key that secures your digital assets. The difficult thing with cryptocurrencies and other new investments is that we all would have bought Bitcoin or Ethereum years ago if we had the advantage of hindsight. We would have bought Amazon stock when it first went public at $18 a share. The Motley Fool, the parent company of the Ascent, is a Bitcoin investor. It does so because it considers it to be a wise long-term investment. What does this imply in terms of application? The Motley Fool will feel safe holding Bitcoin even if its value drops drastically tomorrow because it has examined the digital currency and believes it has prolonged worth. As a result, when prices fall, it may patiently wait for the value to recover again. Putting money into a project without fully understanding the basics in the hopes of it becoming the next great thing, on the other hand, is more akin to gambling than investing. Furthermore, we did not have as many safe cryptocurrency exchanges or protections in 2015 as we do now. Hackers or scammers could have gotten their hands on your Ethereum. It's easy to wish you'd acquired Ethereum 6 years ago, or even 6 months ago, when you look back. However, if you didn't, there are still plenty of options available. The most essential thing is to invest for the long run, so look for companies or cryptocurrencies that you believe will last. Cryptocurrencies are unregulated, and their value can fluctuate dramatically. As a result, the risks are larger, but the profits are also bigger. The recent parabolic rise has sparked concerns about a crypto bubble and fears that it will implode. However, if you see potential in this new technology, you'll be less likely to be burnt by a steep price decrease if you don't spend any money you won't need in the near future. It isn't simple. Individual cryptocurrency purchases, like individual stock purchases, take time. Many investors use mutual funds, exchange-traded funds, or index funds because they don't want or are unable to research each investment individually. Instead, they select a fund, which may or may not include a fund manager, to help them balance their portfolios and risk levels. However, the Securities and Exchange Commission, SEC, has yet to approve any cryptocurrency funds in the United States. As a result, we, as individual investors, must decide which cryptocurrencies to invest in. That can be intimidating if you've never invested before. Another option is to look for funds that focus on blockchain or crypto-related businesses. Whatever you choose to do, keep the long term in mind. Nobody wants to get into debt in 3 months because they lost a cryptocurrency bet. Thanks for watching. Happy investing. Disclaimer. I am not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. You should not buy, sell, trade, or invest in any asset based on what I say in these videos. You should know that investing carries extreme risks. You could lose your entire investment. This is not trading advice, and I am in no way liable for any losses incurred.